Yeah,
it's a giant game of chicken. Kind of reminds me of the Yeezy token, which launched just yesterday. But before we get into that, is there anything to talk about with this whole Jackson Hole thing and the high priest of whatever it is, the money getting up there and people like, I don't know, like sniffing his butthole and trying to figure out what's going to happen? Does that actually mean anything? Like anyway, what does it matter what the Fed does with under their overnight interest rate thing, or the Fed funds rate? Does that actually even matter?
Well, we've talked about this before. It used to matter a lot, I would say, for maybe since 2008 to probably, at least the people that I follow would say 2020. The Fed basically had an outsized effect on the economy, right? They really, really, really determined which way the economy was going, and that spell broke when COVID hit, and the government stepped in and were like, "Hold my beer. Let me show you how to really control an economy," right? And then they just started spending trillions of dollars, and at that point, we entered a new regime, which we're going to be in apparently for the next at least 2-3 decades, similar to like what the Great Financial Crisis did when it entered us into this. You have to pay attention to the Fed, and the Fed was the market. And so, yeah, you basically, I think we're going to see over the next couple decades, but certainly within this decade, kind of the importance of these interest rate decisions become slowly less and less impactful on the market. But we're there's going to be a transition period, and we're not fully out of the Fed's influence. But I think you can kind of see that it matters a lot less now, because, and I think the idea is simply that the spending or the effect that interest rates have, which are not as direct as when governments spend money. So basically, they're just dwarfed now by other actors, basically governments directly injecting money, doing what like Trump has done, but also a lot of other governments which are putting on tariffs, which have these just like immediate and long-lasting effects on economic productivity and all this kind of stuff. The Fed interest rate thing is a lot. How do you say it? Its effect is a lot more subtle and less direct, and so it's just less important because now governments are kind of going to be very much pushing the buttons of the economy.
Yeah. I mean, I heard a theory recently, earlier this week. I think it was a guy on Bankless, the podcast, and he was saying that the Fed has never actually been influential. It's all kind of a scam. They're trying to make it seem like they're influential, and that everyone and the market just sort of it's become like a Keynesian beauty contest. Like people are paying attention to the Fed because people are paying attention to the Fed. It kind of seems like what his theory was.
Interesting.
Everyone knows that's what, like, when interest rates go down, that's supposed to mean bullish assets. So everyone thinks that. So that's why it's bullish. It's assets. It's a self-fulfilling prophecy. And then I heard another interesting theory. I'm not sure about this one, but it basically the guy said, if interest rates go down, or high interest rates are actually good for assets, because it means all the people who have a ton of treasuries are just getting this like stimmy check basically, and they're pumping that into assets. I don't really buy that one, because if interest rates go down, then the theory is right that if interest rates go down, that means you let people are going to pull their money out of treasuries, the things that are earning passive interest, and because they're earning less, and they're going to have to like deploy that money elsewhere, i.e., into assets.
I mean, so to the second point, when I hear that it just seems like when you were talking about this like this thing, and everything you said is true. I agree with it. It just doesn't matter as much as like, is the president of the United States going to put a 50% tariff on China, right? Like that. It's so inconsequential to that kind of stuff. Or like you have like financial repression, which is probably going to be on the table. Things like the government is going to mandate that banks start to buy treasuries, right? Like that's going to have an immediate, much stronger effect than who cares what the interest rate is. If the government is like, you are now going to have to buy them. Or things like what's it called? Companies cannot sell treasuries. You know, it's crazy stuff like this is all apparently on the table. So who cares about the interest rate?
Once that's in place, exactly, it won't matter. You know, how high Jerome Powell lifts his eyebrow when he says a certain thing, and that'll be nice. That'll be nice.
Yeah, but to the first point, I disagree with that guy, because when the government is like really hands off, which it was. Right, it didn't want to directly. It didn't want to direct, in the U.S. at least. It didn't want to direct markets like this. Then it will. That can have a profound impact, because it is a market force, and so I think it does matter. Maybe it probably doesn't matter as much as people thought. Right, so there is definitely some reflexivity in terms of people think it matters, and so it matters more. But when the government has stepped back, sure, it'll have an effect like that. But now we're in a completely different world, so it matters less.
Okay, let's move on to our last. Oh, what?
Well, just we're talking about Jackson Hole, right? Like, so Jackson Hole is coming up.
Jackson Hole,
and this is not a FOMC meeting, right? This is. So the interesting thing that I read on symposium, it's basically a bunch of what's it called? Federal employees get to go to a luxury resort in Wyoming. Right, a super luxury Aspen-like resort in Wyoming, and
because the guy back in the day liked fly fishing or something.
I think that's what the history. That's what it was. That's awesome. I love it.
Exactly.
They get to hang out with Kanye West, right? He's also in Jackson Hole. I think he has a big ranch out there.
Okay.
Yeah. No, seriously, yeah. And they get
buy some Yeezy money.
Yeah. They get to discuss what meme coins they're going to put on the government balance sheet to kind of support the flagging dollar. No, but I think this maybe is more important than a rate decision, right? For example, the September rate decision, because apparently the gossip is that they're going to be laying forth a new monetary policy framework, right? This is the kind of thing that will probably not have an immediate effect, but long term probably will have a much more strong effect than just like, are they going to raise it? Are they going to cut interest rates by 25 basis points, or keep it the same? And so it's something to look out for, and could potentially is maybe the biggest way that the Fed still can have an impact on the market. But it'll be less like a knee-jerk kind of thing.